Uh, yeah, so my volume shouldn't be low anymore. All right. I think I was just speaking softly. I do that when I'm really focused. Good morning. Good morning. That's right. It's wise words. Hopefully, we're live on YouTube. There we go. Okay. Yep, I got the link. That's what I was looking for. Ralph, how are you? We do have Fed Speak right now. So keep an eye out for that. He couldn't have said anything unless his remarks were. Let me check that. Sometimes they're prepared remarks. So they put out the transcript of it. And the, yeah, what's his name? Waller speaking. Hey, Steven. Well, Waller's speech. Yeah, there is a transcript. Its title is "The Time Has Come." So, yeah, I guess they're interpreting that one positively. Great volatility today. Although this isn't really the good kind. Yeah, it does. You're right, Ken. The food. That's what I need to do. I knew I had to do something. Yep, Roger's coming in right now.
We're recording in progress. Did everybody get their email? Cyrus says, I don't think rate cuts will happen in September. Good morning. Good morning. Good morning. Ralph said, of course, rate cuts. Good morning, Tara. Good morning. Ken got his email. Good morning. Did we get our, let's make sure that everything went out today. I got to say, nothing, VIP room went out in the main channel, but not in the pit. Ooh, look at the S&P 500. Look at this thing. Oh, I am not sharing my screen. Hey, Rochelle, how are you? Francis, Bob, ABT is back, so get out now if you missed the exit. Oh, well, thanks, Mark. Let me share my screen here. Robert, how are you? This is what I was this is what I was talking about right here. This bar, that's a nice little up bar. This is the S&P 500. And usually when we hit the 50-day moving average, we tend to stick around at that average, which is one of the biggest reasons why I'm not shorting anything right now. I'm very skeptical that we're going to move beyond the 50-day that easily, especially with the news that we're seeing right now. To me, it seems like we're going to stick around here. So I'm being extra cautious. And yeah, VIX is dropping. And also, if you look at the QQQ, this I found this really interesting because the QQQs is what's causing the downside move. Did SHW give you that T-shirt? No, I got this myself, but I figured today was going to be highly volatile, so it's pretty appropriate. Um, but notice QQQ in the last 30, 40 minutes, relative strength started favoring technology. Okay. There you go, Ken. Good for you. Nice. That APP told you about that one. Okay, so my point is I'm not see the fact that it's Friday and the fact that we've already moved down. It's Miles, it's on your end. We've got sound. Let Miles know. It's on your end. It's on your end. Freebies yesterday made 33.5%, even after laid in, taking profits, bought Pro Trader dashboard, taking tutorial after the close. Oh, good, Stuart. Will you repost that, Matt?
Mm-hmm.
Would you post that? And let me post that to Rodney too. Tell them to put this in the deck. That's pretty good. I like that. All right. So look at that. MPC 40% profit, ABT. Good, 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 good. Yeah, I just wish our trade that we currently have in the pit would start moving back up. We need that one to start moving back up. It's definitely being impacted by the market today. All right. I got a couple of things to talk to you guys about today. A couple of important things. So I don't know what the Fed is saying right now. Matt is listening to the speakers. He's got trader exchange going on right now. But if you look at the employment report, you will see that unemployment rate pretty much in line. Nothing really crazy over there. Average hourly earnings, 3.8%, really just a little bit over 3.7, but again, nothing flat, just not much going on over there. Okay. So the news was not really great. The news was not really good. It was kind of neutral. Let me turn on my TC 2000 here so we can start sharing things. Nice. Nice, Greg. Good. Remember, our job here is to keep Matt nice and busy. All right, here we go. We are ready to go. There we are.
I can see it now.
You could see it now, huh?
Mm-hmm.
Good. Good. Yeah, it seems like employment was on the low side of blah. Exactly. That's exactly what it really comes down to. Um, I'm just looking at a few different things, guys, while we're talking. So bear with me, please. Okay. All right. So we're still pretty positive in terms of relative strength. Let's hold on to that for a while. I'm very skeptical about the downside today, even though we're breaking below the 50-day, because usually we pause around the 50-day. If everything was breaking the 50-day, I wouldn't say that's the case. In terms of the QQQ, the QQQ right now is between the 100-day and the 200-day. It's got a little more to go to the 200-day. Uh, sounds good, Sean. No problem, Sean. And if you look at SMH, which is causing a lot of trouble for us, I warned you about that AVGO. It's crossing the 200. And usually when we cross the 200, we tend to bounce around here as well. They don't just go straight down. Yes, SPY below the quarter VWAP today. Yes, yes. So I'm noticing all of these things. But again, first, it's Steve says you have time. Try to deepen understanding of pivot points. Could you explain pivot points? Yeah, I'll talk about that. I don't know if I could do it today, but I will. Steve says finally got out of CLH. You gave weeks ago 278%. Karen, 86% on the L this morning. Good, 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 good. Looks like folks are still making money. 29.1. Good, 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 good. Looks like everything's moving in the right direction, so to speak. So again, let's watch this market very, very closely and let's watch key levels. Um, and again, there's a few things that are on the docket, but I'm being very, very careful today because it is Friday, and on Fridays we have to be extra careful. We still have that HPE spread that doesn't expire till next Friday. All right. So right now I would be a lot more aggressive if it wasn't on Friday and if the SPY was completely below the 50-day moving average. But we're kind of just sitting on it right now. So nice, Steve. Matt, are you getting all of that stuff?
I am.
So again, we are in a precarious situation, but we don't have a lot of exposure right now. And we only have like one or two positions in most, and most are holding up well. Would you agree with that, Matt, that most positions are holding up
Yes,
well?
they are.
QQQ looks like it's creating a little base here. I don't know if this will be the end of the route or not, but it's down quite a bit, about 2%. Wouldn't be surprised if we tested the VWAP at this point because we've been going straight down all day. Volume today on the SPY, volume is actually pretty good. We're at 20,000 contracts, so volume is pretty good. Hey, Adam, you too. You too. Have a great, great weekend. Have a fantastic weekend. Pull this up here. If I can monitor this and we can go on. The QQQ jumped off a cliff this morning. It sure did. Take care, Adam, and have a great, great weekend. Let's see what I got here. Okay. All right. And we're watching the market very, very closely. Now, there's a few things I wanted to talk about today. I wanted to give you guys a lesson. Adam, we'll see you on Monday. I want to give you guys a quick lesson before we get into the goodies. And then, Kane, you're here, right? I want to make sure you're here so that Matt can give you the screen in about 20 minutes. Cool beans, cool beans. And just so you guys know, Kane officially signed the contract with the pub. He will be starting as a official pub guru in, I think, towards the end of this month or something like that. But Kane is now official. He's now official. You know that, Matt? He's official now.
Nice.
Yes, as of last night. All right, so that's good. Good. We're gonna have to celebrate Kane. Um, oh yeah, my lesson. I wanted to give you a lesson, and I think this lesson will answer a lot of your questions. So I've been meaning to do this, and I don't know why I haven't done it before, but I want to explain something to you. I hope you guys pay close attention to what I'm about to show you. So let's just say, hypothetically speaking, let's pick a stock. Pick a stock, guys. Let's pick a stock. Don't all respond at once, but let's pick a stock. How about Apple? What do you guys say? Apple? GIS? Carmen wants GIS. Netflix, PayPal. I'll tell you what. Why don't we do too many? All right, I shouldn't have said that. How about we just pick? How about we do PayPal? All right, let's do PayPal. Let's do PayPal. Let's just do PayPal. Okay. Chatsworth Chaz. Look at you. So I want to show you guys something. I want to show you guys something, and this is really, really important, especially on a day like today. Okay. I didn't know the market. I was planning on doing this session today, but I had no idea the market was going to behave this way. So it actually but I did know we were going to have higher volatility. That's why I wore this shirt. PayPal is breaking down. Yeah. Wait till the end. If you guys never got out of that position, I know most people did get out of that position, but if you didn't get out of the position, if we're below this pivot here today before the end of the day, you should probably get out. But I want to show you something. I want to show you something. And I'm going to show you using bar charts so that you can. I figured it was you. Carlos. Average true range. See this average true range? See how I have it set at 10? Pull it up on your charts. Okay? You'll see it at the bottom. Now, what is this? What is this? Now this answers be lucky you, Marty. I wish I was as lucky as you. Yeah, yeah. So let me show you some stuff here, okay? Yes, this is a proxy for volatility. All the ATR does is measure the high and low every day for, let's say, several days, and then divides it by the number that you put here, which is 10. So all this is, you're a lucky guy, Marty. So all the ATR is it's a calculator of the daily range averaged over X amount of days. Doesn't really matter. I mean, you can do 8 days, you could do 5 days, you could do 3 days. I like to use 10 days because it gives me a really good average. Okay. Now, let's say hypothetically, so what is the last 10-day average on PayPal? It's about $2.15, right? Okay. So I'm going to teach you a rule, and I tried to teach this rule to somebody yesterday. I don't remember who it was. I should have probably just copied and pasted. But here is the rule that I wanted to teach to you guys. If you don't know what the average movement is, then you don't know if price is random or not, or if price is moving beyond random or not. Okay? Okay. So well, what the hell does that mean? How do I use that? What are you talking about, right? Like everybody wants to know the answer to that question, okay? So let me explain to you. So if you don't know the average range of a stock that you're trading, then you may think the stock is doing something crazy, and the stock is simply doing what it usually does. It's not really doing anything. So if you look at, so right now, PayPal, how much is PayPal down? It's down 2.54. The average range is 215. Well, if Tesla was, excuse me, if PayPal was down, let's say $2, don't send me an email. I'm not saying you do, hypothetically saying, don't send me an email saying, Roger, what's going on with PayPal? Nothing. It's moving its daily range. What do you want from my life? So now it doesn't mean it's all good. What I'm saying is you should always have a perspective of what the average range is before you get hot and heavy about a stock. Okay. So for example, let's just take a look at Amazon. Okay. Amazon, just as an example. Amazon moves almost $5 a day. Okay. Right now, Amazon is just now, it's still within its daily range. So before you ever send me an email or you get really concerned that a stock is doing something crazy, always check the ATR so you know if what you're seeing is something out of character or completely normal. Okay. So for example, Apple, I'll do the ones that you guys mentioned. So look at Apple, $4.80. How much is Apple down now? 84 cents. Is Apple really doing anything beyond random? No. If a stock is not doing anything beyond random, then it's just random. There's nothing to talk about. Let's look at QQQ. What's the average range on the QQQ? The average range is $9.20. The QQQ's down right now, $10.98. Now, is that really all that much? Look at this day here. Look at this day here. And look at this day here. Now, I don't like the fact that it's directional and it's breaking this area. That's a different issue. But my point is always have some perspective and always ask yourself, is what I am seeing random, or is what I am seeing just very, very normal and within its characteristic? Is what I'm saying making sense to you guys? Do you understand? If you don't know this number, if you don't know what the average volatility is, then how the hell will you know if the stock you're looking at or if the stock you own is trading randomly? Cyrus says it's a very good point. Oy, oy, oy. Or if the stock is really doing something crazy. Ken says QQQ is a bit beyond random, mainly because the day is only halfway over. Yeah, I mean, it could come back up. I mean, but my point is, my point, you studied this in my Series 7. I didn't know they had that in their Series 7. Does the same reasoning as the run day a couple? Yes, exactly. What you know what Kane just said? Run day. Remember run day? Is it a random day or is it a run day? That the ATR is a great tool for that. It's it is a good lesson, and it's a good lesson today because today the markets are really volatile. So you see a lot of volatility, you get scared, and then you ask yourself, "Ooh, how crazy is this today?" Well, why don't you just look at the ATR? So now that you're seeing the Nasdaq is down 11 points and the average range for the last 10 days is 9.23. Is the Nasdaq really that crazy today? Not really, especially if it starts coming back up. And I don't know if it will. And I'm not trying to calm you down. I'm just trying to explain to you that where do I look for the ATR? I don't know where you look for the ATR, Rosalind, because you see every platform, every platform has a different places. So my hope is to teach you how to use it on a free platform like Bar Chart so that you can get it right and then apply it to your platform, which is why I started showing you how to apply it here. That's just from high to low, divided by the number, high to low, just a simple average. Okay. 10-day ATR right here. Average true range, 10 days, no smoothing, simple moving average, nothing else, just a simple ATR. That's all you want. And it'll give you the number right here. Yeah. Every in every program that's been around for more than 3 days has ATR. Okay, they all have it. They all have it. Fidelity, Thinkorswim, Rob, they all have ATR, including the free programs. This indicator is about 70 years old. All it does is take the high and low. So look, let me show you. This is ATR. The stock today had a $10 range. Yes, it has a $10 range and it has a $10 range on the third day. We add them together, it's 30. We divide it by 3, it's 10. That's the ATR. This is not a complicated mathematical system. Okay. And I like to use the 10-day because it gives me a 2-week ATR. So now that I've showed you that the average move on the QQQ is 9.323 and today we're at 10.86. Is it really that big? So let's do Tesla. Just why not, right? $11.56. The average move on Tesla over the last 10 trading sessions. So right now we're down just a little bit below that. Does that seem like a lot of volatility, something you really need to be afraid of? Does that give you some perspective? Susan says no, yes. I don't know. Susan, I don't know what you're saying. But you understand. Okay, so my point is, before you guys get all it's falling apart, it's going away, just look at the ATR, man. Why do you pick 10 days? That's a good question. There's no science to it, Don. You could do 7, you could do 5 days. That's fine too. I just think 2 weeks is the standard setting that comes with the indicator is 14. I think that's a little too much, but I like to use, but look, let me show you. Let me show you what I mean. Let's go to 5. Okay. $12.49. So the last 5 days, Tesla's been fluctuating about what it's fluctuating today. Okay. So again, I just wanted you to understand. Richard said, what level should be concerned with ATR? When ATR is 1.5 times the average ATR, 1.5 times, at least 1.5 times. Yeah. Yeah. My point is, yeah, ATR varies with stock. So if so basically, so let me build on that. Now, Richard, let me build on that. The turtles, you remember turtles? We talked about the turtles. They would use 2 ATR as a stop loss. So Leonard says 50% over. Yes. So a typical stop loss would be 2 ATR. So if I was buying Tesla for a position trade, I would take 1250 and I would take $25 times this by two and then take $25 away from this price and put it as my stop loss. Yeah. So I guess if markets have recently started moving, you can use the 5-day ATR. I just find the 10-day ATR just fine. I never really had a problem with it. And I repeat that. Yeah, hurdles. So a lot of institutional traders, position traders, not day traders or swing traders, position traders, they use 2 ATR as a stop loss. That means they want to see 2 times the volatility before giving up the ghost. Okay. So in this case, the Tesla volatility ATR is $12.50, right? $12.49, $12.50. Times that by two, it's $25. They would take that off the current price, and that would be the stop loss. So say the current price is 225, 200 would be the stop loss. I'm just using fake numbers too, to be exact. Okay. Yeah, you can add it to your Thinkorswim. You can add it to your TC2000. You could have it, or you could just have it at the bottom of your screen. My point is, you should always know the ATR of a stock that you're trading so that if you see adverse price action, you'll know that, hey, it's not like there's nothing like crazy going on, because it's very easy to get caught up in all of this, and all of this stuff that's going on right now. So again, let's do this is the last 5 days. Last 5 days on the QQQ, volatility's been picking up a little bit. It's $9.34, and we're right now at $10.73. Not really anything that crazy. Not really anything that crazy. Based on price close, high low of the day, high low. Okay. Where was I? Okay, so now you guys understand ATR. Yeah, as well as previous days. So it takes into account gaps. No, ATR has nothing to do with the Pro Trader dashboard. Okay, so now that we went through that, I wanted you to see that because a lot of times I'll get emails and people are like, Roger, is it too much? What's going on? What's going on? So, and this tool is like 60 years old. Open, high, low, close from previous day's close. So it takes the gap into account. It will take gaps into account. Okay. All right. Wanted to show you that the SPY's just kind of basing out right here, not really doing anything crazy. QQQ is basing out. Honestly, I didn't expect this today because it's Friday and the report wasn't all that bad. And I thought we would stay closer to the 50-day moving average. So, but obviously did not happen that way. Thanks, John. I appreciate it. Now, if we can only get our trade to go our way, right? That's oh, Russell, you're here. Good to see you, Russell. I sent some folks to the video you made this morning or whenever you made it. Okay, so now let's talk yeah, market is expecting too much of a rate cut. So let me now give you my stocks real quick for today. And only go with stocks today that are really breaking down on an intraday basis, like Google's breaking the 200-day breaking down. My stop for this would be right around 161. Let's look at puts. Matt, I have a class at noon. Can you drop the link here? I'll be done pretty soon, Kane, and you'll be able to do your thing. 21 days to go, 80 delta, 160 right here. Right here, 160. CLS right here, 48.93. Yeah, I can give you Russell's link. 1 second. Let me pull it up. Russell's site here. There we go. Here you go. Oh, I'm glad you like it, Russell. Thank you for the feedback. Grab that, Matt. See, we don't just grab reviews from our clients. We grab comments from our reviewers too. All right, all right. Guys, please post your comments and reviews there. I would appreciate it. It would mean a lot to me. Okay. So for this one right here, CLS 72 right here, 46 put. I'm still bearish on ELF. Nothing has changed. Nothing has changed here. 149 as a stop. 74 delta. We'll have to do a spread. It's a little too expensive. 0.5, 0.52. We'll buy the 130 and we'll sell the two. We'll buy the 130 and we'll sell the 125. Russell posted a gain. Why don't you grab that too, Matt, from there when you have a chance, okay? Yeah, please visit, watch the video, review Russell's site, and you can check out more about stealth surges there. So yeah, right there, ELF, 21 days out, 74 delta. No. We'll do here. We'll do 52 delta. We'll buy the 130, sell the 125. All right. Next one, BJ's. We want to wait for this to break the 200. This is not ready yet, but I'll give you the nice, Russell. That's very nice of you. Thank you. Glad to hear it. Glad to hear it. Once this breaks, we will put a stop here at 81.18. We will go 42 days out, 80 delta, 85 put. I gave you this one a long time ago, and nothing really changed. It is breaking down now. Wait for it a little bit more of a breakdown. Thank you, Angie. 42 stop loss at 45.80, 42 days to go, 83 delta, 50 put right here. 50 put right there. Let's continue here. Let's continue. All right, that's the short side, guy. Oh, one more short side. PTSG. PSTG maybe. Right here. PTSD. PSTG. Stop loss, the 200-day line, 50.87. 42 days to go. 78 delta, 55 put. Let's do the long side now. Matt, keep an eye on these longs. There may be something good here for us, okay, for the swings. I would go below this pivot right here at about 78. I would obviously move this to calls or we're not going to get very far. We'll go 42 days out to 82 delta, 77.50. There you go, Francis. That's the spirit. As a matter of fact, second. Hold on one second. Let me put in a trade. Matt, find a place to put this trade in. Okay, here. Okay, there we go. Put it as a swing trade somewhere. McDonald's, 283, 21 delta, 72 delta, 21 days to go, September 27th expiration, 285 calls. You saw my note, Matt? Okay. Smart sheets. Still like smart sheets. Right here below this pivot, about 45-ish level. Right here, 67 Delta, 42 days to go, October 18th expiration, 50 call. Hey, maybe Russell will become a permanent part of our VIP room. Come in and visit us every day. I can't enlarge this chain window. No matter how big I make it, it won't make these bigger. So I have to actually make the font bigger, and I'll work on that, but I can't do that right now. Feels like it's look at that. I love that, Russell. Yeah, we'd love to have you. We're a really good community, Russell. We don't like mess around or anything. We're pretty straightforward here. Uh, Hayview, I gave you the stock a few days ago. I still like this stock quite a bit. 21.48, 21 days to go. It's 87 Delta, 22 call. MDLZ. I like this stock. I like this stock. I would use the 15-day, about 72-ish area, and it is right below this level here. Maybe 72.20. 21 days to go. 70 Delta, 74 call, expiring September 27th. All right, folks. We have a class at noon. I'll be giving you some red meat if I can find some red meat, and there's plenty of red meat today on the table at noon. Yesterday, folks who came into that class, I gave 4 trades. I think all 4 went the right direction. I hope to see you soon. Matt will post a link. Kane, go ahead and take over and give us some content. Yes, we do talk about Clyde quite a bit here. All right, guys. I'm going to tune out and be here in the background. I want Kane to give you a good presentation, and we'll record it and we'll put it in the members area. And I hope Matt posts a link. Kane needs to be added as a panelist, Matt. We got to watch Matt around here very closely.
There's the link.
Bill, Zeta is still a trade. It hasn't even hit the 8-day EMA. Aren't you a little premature to the party? Now, see, this is a perfect example of what I'm talking about. Zeta is down 0.72 cents today. It hasn't even hit the 8-day EMA. We just had it. We just had an ATR lesson teaching you exactly that, Bill. You just can't teach some people. Bill, I just spent 30 minutes talking about it. All right, go ahead, Kane.
Hey everyone, sorry, my camera is malfunctioning, so you won't see me for today, but I'll just share my screen so you have something to look at. I cannot share while someone else is sharing. That's the message I'm
Yeah, you
getting.
got to unshare your screen.
Let me unshare my screen. There you go. You can now share your screen.
Okay. All right, great. So funny enough, Roger had his session about ATR. Well, I thought that we would do a little bit more rewiring and brain surgery today. So if you didn't see my earliest presentations, I talked about how uh, we are wired to lose when it comes to investing and in the markets. So we need to go through this process of rewiring or brain surgery in order to get the right winning wiring in place. And Roger did a great job with the ATR earlier today. So you're getting double surgery today.
One sec.
So what we are going to talk about is the consumer mindset versus the investor mindset. And this is something that trips everybody up because your exposure, your entire life is around the consumer mindset from the moment you're born all the way until you are an adult and you start making your own money. Probably the only time that your first exposure to the investor mindset is when people are talking about your 401k or something similar to that. You never really think about a investor mindset. So we are used to habitually looking at everything as a consumer rather than an investor. Every once in a while, I catch myself slipping up, even now. So what you'll see on Wall Street is some guys, they completely adopt the investor mindset and they start thinking of everything as an investor, and it makes their personal life a little crazy. They drive their wives crazy because they're like, I'm not buying that. It's like they won't spend on the funniest things because of the investor mindset. So you want to have the balance of both so you can enjoy your life and make money in the markets. Right? So what is the consumer mindset? Consumer mindset says buy low, sell high. It's when you think of things as cheap or expensive. This came up a few times in the VIP room over the last week where Roger had to say, well, yeah, it's up. Like Google is down however much it is down today. And it's beyond random, it's beyond ATR, but it could keep on going down. There's a reason why it's on Roger's sell list today or short list today. It's because just because it's down doesn't mean that it's cheap. And we have a tendency from a consumer mindset to think of things as cheap or expensive. And because of that, we look for quote unquote sales. Oh my gosh, Google's on sale. And we go and then we try to catch that falling knife. So when I'm looking for sales, when I'm looking at things as cheap or expensive, price history and price comparison are really important. If I go into the grocery store and I see that eggs are $10 and I go, well, yesterday they were $9. Oh, these are expensive. I'm not going to buy them. Or then you go, oh, well, maybe I was looking at organic eggs and maybe regular eggs are a suitable substitute. So maybe I'll just go with the regular eggs because they're quote unquote cheap. They cost less. Right? And that kind of thinking will get you in trouble in investing. So we have a tendency, if we look at the market as a consumer, then the markets are just a store with all the goods on display. I have Google, I have Apple, I have Microsoft. I start comparing them, which one's the better deal, which ones are cheap, which one's expensive. That all of that is going to get you in trouble if you're trying to invest. So what is the investor mindset? The investor mindset, I'm going to go backwards from the list. Okay, so markets, we'll just think of, well, what are markets? And then we'll just see the difference. So the one thing about a consumer mindset is, and this is one reason why we get hurt if we adopt a consumer mindset in the markets. If I go and I buy eggs today at $10 and tomorrow they go on sale at $9, I might get a little upset. Like, shoot, I could have bought them at $9. I bought them at 10, but I don't really get hurt. I still have my dozen eggs. I still get to eat a dozen eggs. And yeah, I paid $10 instead of $9, but I still get the value of the 12 eggs. I still get the nutritional value. I get my breakfast. I feed my family. And everything's good. I'm not really hurt that much if I buy something at one price and then it goes down. That's not true in the markets because in the financial markets, because financial instruments for the most part are not perishable or consumable. So even if I'm buying an option, which is perishable, the underlying is not. So I can't adopt the same mindset because if I am a consumer mindset, everything's good and dandy because if a price changes, it really doesn't hurt me that much. But if a price changes in the financial markets, it can hurt me quite a bit. So as an investor, when we look at the financial markets, we think of the markets as an auction house. And within that auction house, there's a lot of different products, and each product has its own auction. It's not a market with goods on display where there's a price and you go and you just buy it. So instead of things being cheap or expensive, cheap can get cheaper, expensive can get more expensive. And that's what Rogers is constantly telling us. Well, yes, it's up 5% today, but it can keep on going higher. It can go more and more expensive. So why is that? So if we think about an auction, and let's just say I have something on sale. Let's say it's car, a nice classic car, and the auctioneer goes, "Hey, $100,000 starting bid," and he gets crickets. No one says anything. He goes, "Okay, 95,000, crickets. 90,000, crickets. 80,000, crickets. Oh, this thing sold for 85,000 last year." 75,000 crickets. 60,000 crickets. 50,000. Suddenly there's 50 bids for 50,000. Okay, so cheap can get cheaper in an auction. Just because it traded at 80,000 last year or yesterday or the day before doesn't mean if there's no one there to buy it, then it can keep on getting cheaper. And if we take the opposite, what if we start at 100,000 and someone goes, oh, well, yeah, I'll buy it at 100,000. And the next guy is, no, I'll do 105, 110, 115, 120. That can keep on getting bid higher and higher and higher until we get crickets. So expensive can get more expensive, cheaper can get more cheap because we are in an auction house, not in a supermarket. So price history is only somewhat important. Just like I said, if just because it traded at 80,000 yesterday or the week before doesn't mean it's going to trade again anywhere near that. So the only relevant comparison is to my own inventory. If I bought this car at 80,000 yesterday and I see someone else or have an auction and it comes down to 80,000, I don't want my car to be worth 60,000. So if it drops down to 75,000, I'm going to, I'll buy another one. At 75,000, I'll buy another one. At 70,000, I'll buy another one. That is going to put a floor on that. And that's how institutions work. This is directly speaking to the VWAP that Roger tells us about. So the only comparison is to my own inventory. It doesn't really matter what the rest of people own it at. So instead of buy low, sell high, what we need to adopt is buy on the way up, right? If I see it at 100,000, I'm going to buy it because I see it going from 100 to 102, 105, 110. When I see that 110, I'm going to buy it because there's still a lot of volume there. There's still a lot of enthusiasm. It's going to go to 115, 120, 130 until that volume dries up. And then it starts falling. Oh, cricket's at 130? How about 125? Now the volume picks up again. Then I'm going to start selling on the way down. That's how an investor mindset works. Okay? So I think that is it in terms of, I want to go quickly because I don't want to bleed into Roger's class at 9 because I'm going to be attending that as well. So are there any questions about that? Does that make sense, the investor mindset versus the consumer mindset, and how you want to start looking at things in the financial markets, at least, with the investor mindset and not the consumer mindset? We need to erase the consumer mindset when we're looking at the financial markets and adopt the consumer mindset when you're at Target or Walmart or whatever. I lost my chat. Let's see. Okay, makes perfect sense. Okay, great. Jack Carter says buy high, sell higher. Yes, that's a buy on the way up. Buy on the way up, sell on the way down. How do you identify if something's going up and continue to go up? Well, if you're in an auction house, how do you know if the price is going to go higher? People keep on bidding, and there's a lot of excitement. If we start at 100,000 and the auctioneers goes, how about 100,000? Do I hear 100,000? And half the room raises their paddle, then I know there's a lot of buying enthusiasm. And then if we get up to 150,000 and a quarter of the room raises their paddle, then I know there's still a lot of enthusiasm. If we get to 200,000 and only 5 people are raising their paddle, then I know that it's selling off. It's not really going to go much higher than 200,000. That's probably the end of it. It might go to 210 and 215. There might be some crazy kook in the back who goes 1 million, right? But that is rare. So add that. So the indicator, basically what I'm telling you is, what is everyone else doing? Where's the volume? The volume will help you. And ATR does give you a clue. Remember that a price comparison is direct price comparison is not necessarily relevant in investor mindset, but an ATR comparison it gives you an idea. Yesterday, a whole bunch of people came to play at this price range. So that does give you some information, but let's take a quick look. Let's take a quick look at what happened in the S&P 500. So what happened here is, like, just say on this day, the auctioneer goes, oh, do I see 548? Do I see 550? Do I see 500? And then we got all the way up to 553, 75, and we had crickets. And then so we started to drop back down over here, 550. What happened over here is most of the people who go to the auction house, they arrive in Japanese buses. And the Japanese said, well, hey, we're not providing buses today. Or, usually we provide these buses for free. Well, I live pretty like a few hours away from Vegas, and there are buses that are for free for people to go to Vegas. They'll take you to Vegas for free, and they're provided by the casinos basically. And a whole bunch of retired people will get on these buses every day. But what if today the casinos said, "Hey, I'm not going to if you want to get on the bus, it's $20." And all these people are used to it being free, then a lot of people aren't going to show up. And then so the auctioneer goes, "Hey, what do I see 550? Do I see 552? Do I see 548? Do I see?" And nothing, I get crickets. And then go, "What's going on here? I got a gap way down. Okay, what about 535? What about 517? Crickets." And then suddenly it's like, oh, it took a couple days for people to walk to Vegas because they didn't have a bus. And suddenly now I have participation again. Everyone's here. They couldn't take the Japanese buses being the carry trade, the Japanese carry trade. And now everyone shows back up and says, look at all this enthusiasm I have in the buying. And then it keeps on going up, keeps on going up, keeps on going up. My volume trickles away to nothing, and the price keeps going sideways. That's my clue that it's over. And I'm either going to just keep on going sideways, or enthusiasm drops and we start coming back down. Okay, so that's to answer the earlier question. I forgot who asked it. How do I know that it's tapering off? You look at the volume, you look at the price action, right? And what we see is my ATR is way down here, but look at the ATR right here. The ATR right here, it's tapering down. So I see the enthusiasm at these higher and higher prices tapering off in terms of both volatility and volume, and that's when it starts to drop. Okay. So it's wrong to sell into strength because you don't know how strong is strong. It's wrong to no. It's not necessarily wrong to. Well, it depends on where you are in strength. Okay, so if you're in early strength, then yeah, you're probably going to sell too early. You want to see that enthusiasm taper off. This was strength right here. Are you going to sell into it? I wouldn't. So the term strength that you see gurus out there peddle, they're talking about price strength. And they're saying price strength, but they're not taking into account the ATR, like Roger said, or the volume. So what you want to see is, yeah, you're going to sell into price strength when the volume and the ATR taper off. Okay.
And what's that yellow line?
This yellow line, this is the it's a MA 90. Roger uses a MA 100. But, yeah.
Okay.
Okay. So I will just want to leave it there and give Matt enough time, and also enough time for us all to go to the Rogers class.
Cool. Thanks, Kane.
Let me.
All right, folks, it's Friday. So we have the week ahead for seasonality in graph mode. It's always fun. As you can see, most of these are underneath the zero line, which is not good. Energy looks to be the strongest. Everything else is choppy to bearish. Not a big surprise. September is not a great month for the stock market, historically speaking. And there it is. I'll leave it there for a second. You can also go back to YouTube. And let's jump over to the numbers. We'll do a speed run so we can get over to the webinar. 2 minutes. Here we go. All right. Here is the long side right here. It doesn't look great. The only thing that's barely passable is consumer staples. Everything else doesn't look good enough. Here's the short side. Also don't see a ton here, which is interesting. It's just not producing very much. 10-day hold, that's kind of our guiding star is bearish. All profit factors are under 1. All accuracies are below 50. That is very bearish for the market. The number on the long side for momentum is 235. That hasn't changed very much this week. It's pretty low. But the short side isn't much better. It's 70. So you're kind of not getting much from both ends. The long side is almost always going to be shorter, so it's handicapped. The long side is going to be longer than the short side. That's what I meant to say. Here's 10-day hold, 70 to 30, 117 to 60. So not great. And last number is the profit factor number. Wrong way. 2-week hold this time of year is profitable at 185 out of 550. So that is pretty bearish. And with that, I will leave you this link. And I hope you all have a great weekend. I'll see you on Monday. Actually, I'll see you in the class in 5 minutes. See you, Glenn.